ask someone to explain the internet, I don't think anyone could really explain how the internet works with all the modems and going through back and forth. We just know that the internet works. So a lot of the things, I wouldn't worry too much and bog yourself down too much with a lot of how Bitcoin and blockchains, the inner workings of it, because this is just a top level, just so you can understand the rough idea. But a lot of the time, most people don't even understand any of this. So let's just get started on this. So I think if we're thinking about where the internet started off in TV and media, we've got the top one up, the top left is from the X-Files, and that was like 1994, where they first mentioned the internet. We got on the right there, it's like one of the first, I think everyone knows, hopefully, it's Friends, and this is where Chandler is talking to someone online about cyber chatting to go out with. These are the first mentions of the internet in film and media, and this is like mid-90s. So first question, hopefully Ryan's poll will work, is do you know where the bottom left one is from? I don't know if Ryan's got his poll up. Has that gone through? You might have to talk this through because I've lost my teams at the moment, Ryan. So
yeah, I had a misspelling.
Okay, no worries.
But we have hackers 5. We have the net with correct spelling there. 64% and speed at 5%. I don't think you're fooling anyone, Martin.
I'm not. No, it is from the film The Net. It's not a recommendation to go and watch the film. It's about the internet. It's not very good at all, to be honest. But the key thing is it's Sandra Bullock, and she's looking at the first website, probably that sort of had some sort of payment commerce with it, which was pizza.net. And I don't know, do we have a question about pizza.net, Ryan?
We do. I'm throwing it up there right now.
Me too. So there was an issue with pizza.net. So as Ryan would probably explain the questions out loud.
Well, yeah, actually, this one we hit the limit on Poly, so I'm gonna have to read this poll out loud. So what was the issue with pizza.net? You couldn't pay for the pizza online? They always got the pizza order wrong, or deliveries always took more than an hour? What? Someone from the audience chime in. What do they think it is?
Go on. If you get someone. If not, I'll pick Amir if he's because that's one of the names I remembered in.
What was wrong with pizza.net, Amir? How about Pierce?
Come on, anyone chime in?
I saw there.
Yeah, hey guys, I was on mute. Did it take too long to deliver?
No. It's that's a good idea. The first online sale was in 1994, but the issue was you couldn't pay for the pizza. So we're very used to being able to pay in commas, but in 1994, the way that what happened with is you would actually just have to pay them at your door. So you're just basically putting an order in, and it would go to the branch, and they'll just order it out. But then you would still have to pay. So there's still this issue with paying physically online. So there was a big issue around this, and obviously I think we all now know PayPal and how that integrated with eBay and other websites, and paying for stuff now is pretty standard now. So I'm going to come to what is cryptography, and basically what cryptography is it's how to encrypt something which isn't detectable by others. Okay, so have we run out of our poly questions then, Ryan? I can just go through it or pick peers.
Yeah, let's pick people. So for this question, when was the first example of cryptography? Does anyone have any ballpark estimate when the first example of cryptography was? How about?
I think I'm Caesar code.
Who's that? That's a very good question. Good answer.
I imagine it's quite old, right? It was just manual. They were
yes,
sending back and forth were encrypted. Well, in their world.
That is perfect. Yes, very, very, very good. Whoever mentioned that. Yes, a lot of people just think the internet was the first, or Bitcoin, but no, this went back many thousands of years ago. Really good, well done for the people that just sort of mentioned that. So obviously we've got in ancient times at the top there, then we've got the Enigma code, World War II, and in computer terms in 1976 we have this sort of digital signature cryptography where you have the sender, the encryption, the decryption, and coming back with that. But yeah, well done on that. So this isn't a very new thing, cryptography, but the digital innovation of moving the money probably started around 1997 when the PayPal were coming around to make the payments easier. Then we had Alipay in 2003, and then in Africa, actually, M-Pesa 2007, you had mobile cash, and this is where people were sort of trading minutes, and they didn't realize this, but people were just sort of trading mobile minutes as a form of currency. So we come to 2008, and we have this famous quote for, "I've been working on a new electronic cash system that's fully peer-to-peer with no trusted third party." And this is from Satoshi Nakamoto. In 2008. So here's the founder. He wrote the Bitcoin white paper, and obviously we don't know if it's one person, many people. It's a pseudonym of this person, and he came up with a white paper, basically like near enough instructions of how he felt Bitcoin could work, or a new style currency. So one latest question, then hopefully Ryan's got this, is what is the world's longest running blockchain? Does anyone have? And just someone chime in. Do we have any? What were the options then, Ryan?
Yeah, for this one, the longest running blockchain, we have multiple choice answers here. Was it IBM? Was it the New York Times, the Boston Red Sox, or Heinz Foods? Anyone? About David Joyce, what do you think it is?
No.
Go on, Brian.
Where you at? Sorry. I believe it's the New York Times.
Very good. Yeah, it was the New York Times, and this is quite important to know why it was the New York Times. Really good. Well done. Yeah. So basically, the way they envisioned it was to actually timestamp digital documents as a way to verify authenticity. So this is a really good thing where you can go through and you knew exactly that this document was created and it was modified at specific times. So again, this resolved intellectual property rights. With it being timestamped, it was impossible, obviously, to change this document without it being obvious that it's changed. And it's actually impossible to change the timestamp itself. So that's why New York Times, and it's still running now. I think it was 1995. So we're coming up to nearly 30 years of it running. And that was the world's first blockchain, or oldest blockchain. Sorry, there's probably other ones, but that was the world's oldest one. So I'm going to explain what actually blockchain is, because I think we know and hear blockchain, but we don't actually always know what it is. So I'm going to use an example of I love you. Okay, so imagine you're out in a restaurant, or I'm out in a restaurant, and I've got my lovely partner, and it's that time I want to tell her that I love her. So I've gone and explained that I've loved, or said very passionately, I love you, and it gets a little bit awkward. So I can now just go back and say, I never said that. So if you think about sort of being able to take back what I said, that could be like a central system, so I can deny it and no one actually can endorse it. No one else was around, aside from my girlfriend, to sort of say, oh, you said that. But now if I said it and there was a waiter standing next to me on that, I can actually then, now I've got a witness as the waiter. So what I'd have to do is maybe give the waiter a bribe or ask him very nicely, could you just not back me up, or back anyone else up that they heard me saying that I love you. So I'd have to convince the waiter to lie for me, and that's basically a central system. But if you guys were on this Teams call live from the restaurant when I've gone and told her I love her, it would be near enough impossible, even if there's random people calling in, to sort of say that I didn't love her. And this is blockchain, where there's random and multiple witnesses to this. So with this distributed ledger, which is a blockchain, we've got like kind of made up of a cube of three compartments, and Galina's got to probably help me out a bit with this. So we're going to have, as we see here, we've got the hash of the previous block, the data which is in the actual block, and then you've got the hash itself. So if we're looking at a Bitcoin data in there, we'll just think it's a transaction. So it's from Galina to me of $100, which is 0.0001 Bitcoin. And that would be the data that's stored in that block. And then we got the hash there, which is like a fingerprint. But I think, Alina, if you're around, you can probably explain it a little bit better than me.
Yeah, happy to. Think of a hash as like your bank statement. It has all the details of how much money you've spent, how much money you've received, your paycheck information, all of the transactions in between. And at the statement, it says how much money you have. So that bank statement tells you information about what you can do in the next month, how much money you have, and how much money you can spend, therefore. And at the end of that following bank statement, it gives you all of the information of how much money had come in and out, and then sets you up to know how much money you have to spend in the following bank statement period. So it uses the information from a previous time in order to inform you of the actions you can take in the future.
That's brilliant. That's a really good way of explaining it. So obviously then we've got this hash, just the key at the top is near enough like the bank statement, which would be like November 2021. So each block there then would look at the hash of the previous block. So as Galina was saying, it'd look at statement October 2021 to see what the account balance was. And this is what's creating the chain. So putting it out this way, you can then sort of see that each block here is looking at the previous hash to make sure that they link up with the blockchain. And first block is called the Genesis block. That's just a bit of geeky knowledge, but as you can see here, the second block then looks at the hash ID of the first one, just so they know that they can link up. Now, if something has been changed in that actual block, the hash actually changes. So you then will not be able to complete the blockchain because it will look at the previous hash and go, well, actually, I'm expecting 6BQ1, and now it's telling me it's H62Y. So that's what the great thing about this blockchain, as we looked at the New York Times, it can't be changed. And if it does change, you'll be able to notice why and see that. So it's a very slow and steady process. I think each block takes a few minutes depending on what chain you are. Some take quicker and some take longer. So can have a look at proof of work. So this might be a foreign concept, but this is just, again, how some blockchains work. There's different types of ways that blockchain work. And I've got the proof of work, and basically it's the consensus mechanism that allows us to distinguish between a valid and an invalid blockchain. And it's the winner of this is that everyone can, verify that they have won. So there isn't like anyone thinking, oh, they've cheated. And the winner is basically like a lottery, and there's like complex maths problems, and it's basically the first person that gets the solution of this and that doesn't hear any shortcuts get this, so gets the prize. So question is, if people are still with us, what is for each block the reward block? We can either do it in Bitcoin or we can do it in dollar value. Ryan, can you pick someone or someone shout out anyone that is there what the current prize per block is?
How about Michael DeSantis? What do you think it is? $100, 10,000, 1 BTC, 6.25 BTC.
0 followed by 20 zeros.
What was it again?
So the answer is 6.25 Bitcoin, which is about $250,000 dollars. So it's really good to win this lottery ticket, basically this block winner. And I don't know if you ever hear about the halving, but every roughly 4 years, and it does get a bit longer, it gets harder and harder to win the block, and the block reward goes down as well. So to get the Bitcoin, and this is why, as you see with Bitcoin, they talk about cycles with block and block halving. So you get your Bitcoin. How do you store it? There's a couple of ways. You can become your own bank, and you get an address, and you get this private key, which is like a password, but it's a very long one. And if someone has your private key, they can get all your Bitcoin. So again, You don't let anyone know what your private key is. On the left, this is the old way of having a paper wallet. But on the right, there's this new form of a seed phrase where you're given 12 or 24 words and you have to remember these words, and you have to keep that. And again, if anyone gets these, they get all your balance. So you've got to keep this very, very safe. So you might be thinking, oh, why can't I keep it on exchange? Which again is a really good idea. You can use Coinbase. I think everyone's heard of Coinbase, eToro, Binance, loads and loads of exchanges. And yeah, you can keep it on an exchange, but there's a term in crypto called not your keys, not your crypto. There's many exchanges that get hacked. And if they get hacked, they basically have no liability or no need to send you your crypto back. And we found there's a very famous Mt. Gox, and there's loads of these where exchanges get hacked, they disappear, and they've taken your money. So people like to be their own bank, hold on to their keys, but obviously if you lose it or someone gets hold of your seed phrase, bye-bye, take it on the exchange or do a mixture of both of them. So I talk a lot about pizza actually in this, but this is a big slice of pizza. And the reason I bring it up is the first time there was like sort of this transaction between Bitcoin and like a monetary form of transaction. There was this guy called Laszlo, and he went on a forum and he just wanted 2 pizzas delivered. And he wrote on a site, said, I want 2 pizzas delivered. Can someone send me it? And I'm offering, the pizzas cost about $20 and I want to give you $40 for it. So you're basically doubling your money. There was no response. Then he messaged again, no response. He said, come on guys, you're doubling your money. This is like an easy bet for you. And then eventually someone did send him the pizzas. It was a guy from the UK. Does anyone know how many Bitcoins that pizza was? So how many did Laszlo give for that pizza? Did anyone call out?
Yeah, 10K.
$8.
10K. Very good. 10,000 Bitcoins, which is roughly about $400 million in today's money for these pizzas. So yeah, he really wanted this. Is his original message, and you can even see his Bitcoin address right at the bottom from Laszlo. Doesn't regret it at all, and there we go. That's even his pizzas there. Said, I successfully traded it for 10,000 Bitcoins for pizzas, and I think Papa John's do like an International Pizza Day. So yeah, well done who called that out. That was really good. Well done. All right. So we do have Bitcoin, and then we've got something else called smart contracts. So smart contract in a way is a bit like a codified blockchain where you can put code in. So I think everyone hopefully knows about Kickstarter, where you can put an idea up. So if I have an idea of this cooler, I think it's one of the most subscribed coolers out there, I say I have a cooler and I have a goal to raise roughly 100,000 in donations. Once I get to 100,000, then I'll give everyone who donates $100. I'll give a call to everyone who donates $100, and then what happens is after a week, everyone loves this idea. I get my $100,000. So what happens when I get this goal? Kickstarter give me that 100,000, but Kickstarter's holding this money. If I don't get the goal, Kickstarter returns the money to everyone then who has pledged to me. So basically a smart contract is Kickstarter in this. It's all automatic, so it can be sort of set up. So a smart contract is just basically a piece of code. It's a if this, then that. And on Ethereum, Solidity is there. And just on the side there, this is just a basic smart contract. But again, anyone can look at a smart contract. Anyone can code a smart contract. Anyone can view it, deal with it, deploy it. So a couple of examples of what you can do with a smart contract. You can swap. So for here, you can swap 1 Ethereum, which is a token, for 1,000 Dogecoin. And you can do that with a decentralized exchange. So again, this is just swapping one thing for another. You can do like smart contract rewards. So there could be something codified to say, if I get 1 million subs on YouTube, then YouTube automatically will pay me $100,000. Again, this could be if and then. You can also start doing something like insurance, a smart contract insurance. So if you're a farmer, it could be something like, if it's 95 degrees over for 5 days in a row anytime this year, then Farmer Phil gets 100,000 as insurance. So it could automatically deploy and send it to him. So just as a side point, and we're going into a lot of deep deeper detail on a lot of these topics, there are these things called oracles, which can be deployed, and these are helpful tools for any smart contract. So they're like it's like a trusted source for real world information. So one of the famous ones is used, it's called Chainlink, and again they use the oracles, and again you can set up anything for weather or anything sports. So I could do a bet with Ryan and have the oracle settle it of who's going to win the Super Bowl, and there's as it's code, you can't change it. It's immutable, so they cannot change at all. So with this bet of the Super Bowl, we both bet together. I can't say, well, actually, I didn't say the Rams is going to win today, and then Ryan would say, well, I said the Chiefs at the start of the season. So, but then actually, I want Bengals. It's like we know what it is, and it'll automatically pay out on there. So it's an if then else. So the question also people say is, what happens if there's a bug? Because you can't change the smart contract. Then what you would do if there's a bug is you'll just change the smart contract and you'll tell people to use the new one. Other benefits of a smart contract is it's distributed. So it means, again, no one can sort of argue against it. So we have no need for any lawyers at all. We know what it is. It's in the code. Anyone can view it. And it's between a few parties, automatically executed when these certain conditions are met. So it's code, and it removes all the human errors and any issues that come with it. So, looking into the future, we could quite easily use smart contracts to buy a house. So you might have your house, you put the deed up on the blockchain, you get an NFT for that deed, it'll go around and someone can buy it off you, the NFT, which is the deed, the legal deed for the house. And then they can move in, which is ideal, because like buying a house takes a hell of a long time. There's lots of fees that go with it. It's a very slow process, but possibly putting an NFT up on the blockchain for a house deed could swap it over and completely kill real estate and make the process a lot more streamlined. So just a couple more topics just to quickly go over, because I know we've been going at quite a quick speed. Coins versus tokens. So again, like hopefully you're familiar with a lot of the crypto coins and tokens and what they are. So a lot of people think they are the same, and in theory they are. They all run on blockchain. So you have specific coins, as we know, Bitcoin, Ethereum, Ripple. They have their own independent blockchain, so it's their own blockchain. Where token is the opposite. It's a cryptocurrency that doesn't have its own blockchain, and it operates on another blockchain. So we have Tether, which is USDT, BAT, Doge. They all use Ethereum, so they're running on Ethereum. So if Ethereum went down, for instance, it wouldn't work. There'll be issues with it. Or if they need to move a coin on it, they use the Ethereum blockchain to go through that. So the tokens are serving a different purpose. They offer a variety of functions, and the use cases specific to the ecosystem for that token on there. And coins as well, the other difference is they're created through mining or staking, but tokens are normally all created up front, and then they get distributed through like an IPO, which is called an ICO, and held on to the founders. So that's why you sometimes hear someone owns 90% of the supply, because when they decided to sell or set up the token, they kept 90% for them. One of the last things I just wanted to talk about was layer 2. So you get to hear that Bitcoin's getting slow, it's getting expensive. Ethereum, to move anything on Ethereum starts to get expensive, and there's fees with that. So one of the things that's coming out, and again, this is very new technology, and everything that we're speaking here is very new technology, and it can all change. Like maybe by the time we do the last one of these chats, there's a new topic or there's something completely new on this. But they're called layer 2s, and what this does is a layer 2 is an overlaying network that lies on top of the blockchain. So you can do a lot of near enough the micro transactions that you don't actually need the big blockchain to do, to without basically having the users to pay the sky high transaction fees, or you're just wasting time on miner verification. Bitcoin, like the layer 2 for Bitcoin, is called something called the Lightning Network. So you can do all the Bitcoin payments and transactions near enough instantly without any fees. Whereas if you use Bitcoin itself, you're paying a lot more with the fees and the mining. So we're going to be going on with our in-depth talks a lot more about these layer 2 protocols and how the layer 2s work and the different types and why that's happening. But I think the layer 2s have sort of come about when people have realized now that the networks start to get congested and you can do a lot more on the side with these layer 2s. So as we look on the side, the layer 1s, these are the base layers, and then you've got the scaling to the right. So for instance, the Lightning Network is for Bitcoin, and then Polygon uses Ethereum. So not all the layer 2s use all the coins. It's normally a layer 2 for a specific coin on there. So what's next? So Galena, it's got a couple of links on there. I don't know if you want to mention your lovely hackathon project.
Yep, I'll share my screen as well to
Yeah.
add some visuals.
Yeah, go for it, please.
Okay, so for what's next, I want to talk about how you can get involved in some of the resources you can utilize in order to get involved if you want to start developing or get some hands-on project. This past week, I was part of Miami Hack Week, and we were working on various solutions on layer 1, layer 2 blockchains. I was in a hacker house that was dedicated to Solana, which is well, they peg themselves as an Ethereum killer, so that can give you a clue on what their goal is to completely replace Ethereum. Solana allows a high throughput, 70,000 transactions per second, and it is extremely low cost, a fraction of a penny for a transaction. So my team had an idea that built out 2 use cases for it. The first one was a shrimp game. If you guys have watched Squid Games, we totally lifted that idea and branding to give you shrimp because the Shrimp Society organization was a sponsor of this house, and they're a society that helps founders with their projects. So this app was actually deployed. We used, and the links are in there, so you can read more about how we did and what we used. For the second use case, we used Figma, we used Firebase for the deployment and a database OAuth, React, Ionic on the back end as well. And then Solana is the blockchain along with Taurus, which is an application on the blockchain. And we were also used the QR reader that came with the app in order for users to be able to play the game. So how you play the game, we printed out QR codes, put it all over different places around Miami, and then a user would just go to shrimpgame.io, log in. They would find a QR code that we had posted. They would scan the QR code and then get their NFT. This isn't an NFT yet, we will mint, but right now it's just a file that they got to claim that they had collected it. And then they're able to see how many places they visited. And there was actually a real life $1,000 reward for these NFTs that they collected all around Miami Hack Week. And somebody did win it because they found all of the QR codes that we had posted. And then, of course, you can collect your Solana. You can hook up your Solana wallet in order to be able to claim all of those NFTs and mint them. The other use case that we had was a loyalty program all in one place that uses NFTs for these icons to collect your loyalty rewards. So if you go to a restaurant, a cafe, a gas station, a movie theater, you scan a QR code that comes on your receipt, and then you collect your loyalty point. And after some loyalty points, you can claim a free coffee or a free sandwich, however you would like it. This is a Figma prototype. We were able to create a real life website. It's very buggy. That's why I'm using the Figma. But the whole point of using an application on Solana is to abstract the whole wallet side of it. So this is meant for user adoption. You create an account with an email address, social media. After you create an account, a wallet gets created for you on the back end, and all you have to do is go and make purchases and start earning your rewards without ever realizing that you have a wallet and you are using a Solana blockchain on the back end in order to collect these loyalty rewards. And then lastly, I wanted to show you Gitcoin, which has hackathons on here. DevPost actually has hackathons too that you can look into. This Gitcoin has hackathons, but they also have bounties. So if you after looking into the development side of things, if you wanted to try your hand at solving a few problems, you can look at bugs or things on Gitcoin for real life companies to be able to solve it. And they may have cryptocurrencies hooked up to this. You can earn in crypto or earn in cash. And that's it for me on kind of some of the next steps.
I'm going to put you on the spot and ask you a quick question because I know everyone wants to know why use blockchain for the first one for the Squid Game.
Oh yeah, for sure. For the Squid Game, it's all about gamification. We wanted to put Pokemon Go on blockchain. The original idea was to use NFC tags. So there's some learnings that we had about creating an app with NFC tags and augmented reality into making it a bit fun. The Squid Games is more for like the crypto native people that want to be able to use a blockchain to play a game instead of having a centralized backend system. For this game to function, it's all on the blockchain.
That's great. And yeah, no, sorry, I put you on the spot there, but that's brilliant. I think what we'll find in like maybe 10 years time, we'll be using blockchain without even realizing we use blockchain. Like we use AI a lot of the time. Like when we go use Google Maps, we're using AI, where people, we're not going to use AI anymore, we're not using it. There's going to be a lot of times we use blockchain without realizing it, and that will be our day-to-day. And that's probably when the adoption really can be said it's happened. So
yep.
Hopefully
last one on that is the whole adoption is, blockchain. I'm not going to go over all the benefits of blockchain at this point, but you get in a car and you drive a car, and a lot of people don't know how a combustion engine works, but you trust it to work and you trust it to get you from point A to point B. And that's where we are in this point of time, where we need to start building that trust in the blockchain system, where people don't even realize they're using it. And when they do, they already know that these applications work.
Totally. If on YouTube, there's a really good video of I forgot what it's like, a morning show in America, and they're trying to explain what the internet is and email, what it is and how it's a fad. It's a great little watch because it just shows how people's thoughts have completely changed on that. So that's really good. Thank you very much for that, Galina. Hopefully we're all warmed up now for Ryan to show us a few examples and demos. And if you do have any questions afterwards, we'll be doing a Q&A after this demo from Ryan. So yeah, has your Ethereum dropped?
Yeah, so based on what you're talking about, also they have, if anyone is a user of Vanguard, I think most of their funds are run through a blockchain. Little tidbit of information. So we're talking about smart contracts and kind of the use cases, and I wanted to show you more of like that Web3, which you could also consider the decentralized web, where blockchain is being utilized, right? So to start it off, what you'll need is a self-custody wallet. So as Martin had pointed out, a self-custody wallet, meaning I am wholly responsible, right? So for the holdings that are in there, similar to your physical wallet, if you lose that 20 bucks that's in there, it's on you. And no one is out there to protect you. No one's going to rescue you. So the most popular one that's on the out there right now is MetaMask. And I'm going to go ahead and show you that. So I have MetaMask set up, and this is on a test network. It's got a little bit of ETH in there. I think that equates out to like maybe $260 if that was real Ethereum. So I'm going to go ahead and show you a swap. So let's swap some of our ETH for a stable coin. So Uniswap is owned by a startup, so it's not. It is decentralized, but it is owned by a company. It's a centralized company. But we call these decentralized exchanges, or DEXs for short. So a smart contract is actually going to control the liquidity. So it's an automated money maker. So instead of a centralized exchange like Coinbase or peer-to-peer trading, Uniswap depends on multiple individuals making up a pool of their tokens into a liquidity pool, which is governed in the back end by a smart contract. So let's go ahead and launch the app. And you'll be presented with this, but you see in the top right, it says, hey, you need to connect your wallet. Well, I got MetaMask, so let's click on that. MetaMask is going to say, hey, do you know these people? And then do you trust them? And I say, yeah, I trust Uniswap. So let's go ahead and connect our wallet to Uniswap. So it's going to tell me my balance as I showed you before. So it's like
so
0.01.
Just rhyme for the purpose is the MetaMask isn't showing up. The overlay isn't showing up when you're doing that. Just this. There you go. Show the magic. What's Ryan's doing that? MetaMask is just a browser extension. So Chrome, Brave, Firefox, you can just put that in as an extension and it just reads the blockchain. There we go. Perfect. There we go, Ryan. Perfect.
Apologies.
So we can see the balance there.
Yeah, so let me back it up and it'll only take 2 seconds. So let's go ahead and launch Uniswap. So Uniswap is going to have this presentation. It's going to say connect wallet. I'm going to go ahead and select MetaMask. And MetaMask is going to pop up with some of your accounts. And it's going to say, well, which account do you want in your MetaMask? And then do you want to connect to the site? And you go, yeah, sure. So you're giving permission here. They don't need to know KYC, anything like that. I'm just some wallet out there on the internet. So it's going to tell me my balance, and I can see it up here as well. And I want to go ahead and swap that for a stable token. So I think you had mentioned Tether before, Martin. So let's go ahead and select that. I'm going to try to max this out. I know it's on a test network, so it's probably not going to let me do a whole lot. So it's basically saying that 0.002 Ethereum, if you're to swap that, you'll get 6 USDT. So I'm going to go ahead and click swap. It's going to present me with a confirmation, a preview confirmation. Expected output, you have price impact. Are you going to move the market at all? And I'm going to confirm the swap. So this is going to go out on, this is a Koban network, so it's going to go out on the blockchain. It's going to say, hey, let's go ahead and confirm this transaction. If this were on the Ethereum mainnet, I would have to pay a fee, and that's called gas. So it's showing the estimated gas fee here within the Koban network, and it's saying what I'm going to pay for that. So I'm going to let that run. Koban is very slow. So just for the purposes of keeping it brief, let's move on to DeFi. So let's go ahead and go over to Aave. So Aave, think of this as more of like a decentralized banking, right? So people can borrow and they can deposit. Again, this is handled by liquidity pools run by smart contracts. So let's go ahead and I don't know if that Tether is there yet. But let's connect our wallet like we had done before. It might be waiting for that transaction. All right, well, Koban again is very slow. So you would be depositing your Tether and you would be gaining a yield by doing so. And this, some people call this yield farming. It doesn't look like the deposit APY is much right now, but if you had DAI or Binance USD, maybe you could earn a little bit more interest. Or you could come to this and you could borrow these tokens from Aave. And again, fully decentralized, it's made up by, it's governed by smart contracts. So that is Aave. And then as some of you might have heard on the news or SNL or what have you, NFTs. Also popularized by South Park. So NFTs are non-fungible tokens. Think of it as digital collectibles. Your wallet is the on-chain record stating that you own the asset as in the distributed ledger. So OpenSea is a marketplace for these NFTs. Think of it more like Amazon. So let's go ahead and check out, as you might have heard, like Bored Ape Yacht Club. So again, this is on a test network, so they have a fake Bored Ape Yacht Club. This one, I think it says 25. I don't think we can afford that. But let's see if there's something else that we can afford. So let's explore some NFTs. Let's do buy now. And then let's sort it by price. Let's do 0.001. I think I have that in the wallet. hopefully the Tether has finished that transfer. So let's go ahead and buy us $0. Let's do that. Yeah, looks like there are multiple things waiting. So there's Aave connected, and there's OpenSea connected. So let's go ahead and buy. Oh, it wants me to go to the Ring-Compete network. Anyhow, you would buy the NFT. It'd be updated in the blockchain stating that your wallet is now the registered owner of that NFT, and no one can take that from you. Again, this is facilitated by smart contracts. And then finally, go ahead.
No, I was going to say, so with this, do they know who I am when I'm buying this then?
No, there's no identity information transmitted between your wallet and these networks. That will soon change based on some of the regulations that are passing through the US. Well, I guess they would only be the US. But you have things that are called like decentralized identification cards that you would keep in your self-custody wallet that maybe you can share with some of these sites in order to cover off on those regulations. But that's discussion for another time. Finally, let's get into Decentraland, which is, as some people have heard, of the metaverse. And there's several metaverses. This is just one of them. You can come to the site as a guest. You don't need to connect your wallet. But if you connect your wallet, you get to kind of track and enjoy more of the experience. And then another option that you can do when you're in the metaverse with your wallet is incorporate some of the NFTs that you might have purchased on OpenSea. And OpenSea, again, is one of many marketplaces for NFTs. You can go anywhere to get NFTs, but we can bring them into these environments, these worlds, for us to interact with them and get more enjoyment out of them. So that's where I'm going to stop, and we'll turn it over to Q&A. And we're going to handle Q&A for folks that just want to drop it in the chat, and we'll have more of like a Ask Me Anything style.
Yeah.
And we'll pick questions from the chat.
Please go. And I'll tell you what's really, really good about that is you can sort of set up, if you have a MetaMask, you don't need to have bank accounts or anything set up with that. You can just get moving and do all these financial transactions and DeFi, centralized finance straight away. You don't need to have any of that, just the speed with that. I'm going to sort of spring something on you actually, Ryan. We do actually, within Lab, we do have actually our own smart contract that was deployed. I don't know if Craddock's still here and he can sort of just explain that.
I'm here, Ryan. Do you want to take it?
No, you go. You go for it. Go for it. It's your,
right,
it's your baby.
All right. So as you guys might know, we at Lab are actively sort of working towards this capability, and as part of that, we also wanted to sort of deploy our own DeFi application. So a while ago, I put a link in the tech chat, but I can post it again. But we deployed our own Lab49 coin that you can also test with. So you can go to that URL. You can connect your wallet like Ryan showed using MetaMask, and you can actually buy Lab49 coin. You can stake it. You can do a bunch of cool things with that. But again, it's test stage. I would just invite people, if you guys are interested. That project is there, and you guys can contribute. But do check out LabCoin when you get a chance. That's it.
That's great. And how long did it take for you to set up and create?
1.5 days.
Yeah. So yeah. So like the time it takes that is not a huge amount. I know you're a man of great skill there, Craddock, but yes, these are months and months of this. It was
I do,
sort of,
Martin. I do have a copy paste skill, pretty amazing.
So yeah, that's great. So now please feel free to sort of jump in, chime in for any questions. We got.
Can I set a point of clarification on the NFTs real fast?
Yeah, go.
So one thing that like I know a lot of people in the NFT space, his head would explode, but they're trying very hard to change the narrative that NFTs have to be purchased via crypto. One of the main things that they actually view as slowing down the adoption rate is for people to actually, the notion that they have to convert all their money into a crypto, go to an exchange, pay a gas fee, and do all those things. You see with a lot of the newer and like heavily funded NFT platforms that are sprouting up and are signing deals with major brands. One of the main things they are offering is ACH and debit and credit card. because they view that as the only way it's going to get quick mass adoption to the scale that, actual multinational corporations want. Like no one would want to offer their product if you were like a recording artist, or if you were a company like Disney, offer your product only in crypto. So you're really seeing a decoupling of NFTs in a lot of spaces from the actual cryptocurrency origin. And then it just becomes a blockchain recording mechanism.
Exactly. That's a really good point, Jeremy. No, I'm glad. Sorry, I'm glad you mentioned that. Yeah, like again, Top Shop, Nifty Gateway. You can buy this directly with your credit card without any touching of Ethereum or any crypto. And that's a really good point you brought up. And it's just getting easier and easier. I've had a few people message me from Lab to ask, "Oh, how can I get it without buying Ethereum?" And it's like, actually, a lot of these now, you wouldn't even know that it's crypto involved. That's a really good point, Jeremy, on that.
No, yeah, and it's like it changes the whole nature of it, and then basically becomes just like anything else. It's just a back-end system that's used to authenticate the individuality, but it's not this native thing that you have to be in this whole ecosystem. It makes it available for anyone.
Yeah.
All right.
That's right.
Yeah, NBA Top Shot, I think one of the first movers in that area, right? So they kind of black boxed the NFT ecosystem, right? So what you're saying, you didn't have to actually buy Ethereum and then buy an NFT. You could do it through their ecosystem on Top Shot. And they recently launched NFL All Day, which is NFTs for moments of the NFL. So we have a few questions from Arby. So how do smart contracts validate events that occur in the real world, i.e. the temperature being above 95 degrees? As Martin had in his slide deck, we talked briefly about oracles. So it's another smart contract that's like using real world information in order to confirm events actually occurred with great confidence. So, trusting that oracle with the smart contract would lead us to an actionable event on that smart contract to pay out the insurance. For that example,
they possibly hook up to like. I was going to say they would probably with the weather one probably maybe look at weather sources like to get that information for them to know that it's 95 degrees.
Yeah, so basically, like Chainlink, for example, has a bunch of nodes which provide the data for weather, and then it's a consensus mechanism within Chainlink to basically provide that information as part of the consensus and nodes.
Right.
That's great. And then RB, I think number two, yeah, you're very, very right. You can, and this is again happens in the art world. It happens to a lot of things where even people buying many art products get their friends or get other organizations to go back and forth. Yeah, you can easily sell it back and forth and drive up the price.
This is actually a real problem with some of these tokens that are thinly traded. You'll have wallets that they're I guess automated to do wash trades to simulate actual volume to bring confidence to that particular token. It's discoverable. It takes a little bit of analysis and research and auditing, but people do in the area figure it out.
It is, and again, the good thing about blockchain is that there is a trail. So it might not be obvious at first, but then you can start maybe seeing, oh, okay, this wallet keeps sending it back to this wallet, then keeps buying off this wallet. So yeah, very good question though. That is a good question.
Anyone else?
We've got our Chainlink sorts there. Thank you very much for Damiano.
All right, so blockchain ensures immutability, non-repudiation, but how do you ensure trust in the actual entry collection of the data? Example, rig sensor reporting inaccurate info. Doesn't that create a new trust problem? Yeah, I guess it would. I mean, you're going to have people that want to manipulate it and have their own self-interest and what have you. You might have multiple consensus on an oracle, what have you, to bring that into the trust of that oracle. It's only getting better, and people are going to have to problem solve, and that's kind of where this particular technology has gone. Is that there's a new thing almost every hour.
But Ryan, is the question specifically for Oracle, or in general, how do you trust the blockchain entry? Because there are two different things, right? Like
I was reading it with the rig sensor reporting inaccurate. So that's how I was going with the Oracle on that question. But
because I mean, we can. Do you want to talk a little bit about the double spend?
Yeah, I mean, it's like I go to an ATM, right? And I go, hey, I got $1,000 in my account. I want to take $1,000 out. And before the transaction ended, it goes, do you want to make another transaction? I go, yeah, I want to take $1,000 out. And he goes, oh, you want to make another transaction? Yeah, I want to take another $1,000 out. Like you need to have some concept of what they use in crypto or nonces, to be able to order the transactions appropriately, so there's no overspending on the actual crypto coins that you might have in your wallet. So, did you want to add anything to that explanation, Credit?
No, I mean, that's exactly right. So, I mean, there is a problem of faking an entry into the blockchain, right? There are these things called 51% attack, right? So, so the way it works is that there are multiple people adding entries, and if somebody holds a 51% of the network, they can add an entry and make everybody else's entry invalid. That's a very fair thing. Now, the only safety, and correct me if I'm wrong, others who probably know more than me on this, but the only protection against that is the fact that you have enough decentralization that getting the 51% of the nodes is impossible, even for large countries and organizations and states. In fact, it has happened on some networks like IOTA or something, but there are these pitfalls. It's generally harder to execute on good L1 blockchains.
Yeah, and for the next question, NFTs denote ownership, but where is the asset actually stored? So preferably you would have the asset stored on the blockchain, but there are other technologies like IPFS and IPNS, which is a file system and naming service for the location of that asset. So anyone with the ownership of that IPFS or IPNS could update the image.
It is. Yeah.
Yeah. But you'd have to
this
update.
Happens.
Yeah, go ahead.
I was going to say it. Go on, sorry, I'll let you finish.
Yeah. So you would want the naming service to update the asset location with IPFS if that were to occur. And some of these NFTs actually mutate, evolve, what have you. So it's preferable for those to have an updated asset. And it could be anything, right? So go ahead, Martin.
No, I was going to say, because some of the NFTs, and again, this is not all of them, and also just want to remind, NFTs isn't just images of JPEGs, but some of them are just web links that go an HTTP link, and some smaller projects just might store it on a local computer, and if it goes, it's gone. So there are obviously pitfalls, and this is why, again, more knowledge you have about these things, the better it is. But like bigger projects, obviously, then like board yacht clubs, it's like worth about 800 million now. So they're obviously going to do a lot. And a lot of these NFTs, when they sell, the artists get royalties. So it's in the interest of the artist to keep continuing to give good support and provide the community with feedback and update them, because every sell they get a percentage.
Can I add one more thing quickly?
Yeah.
So I think it's a good question, right? So why not store the data on the blockchain? And the reason is just commercial, right? So in blockchain case, the amount of price you're going to pay would depend on the amount of storage you use, because basically these smart contracts are executing on people's nodes, right? So on your personal computer. So why would you store 5 megabytes of data? So you have to pay for it. So that's why people start storing it off-chain, and then with that comes all the complexity. But it used to be the case that people were actually storing it in Ethereum a long time ago, but that just did not work commercially.
Right. Yeah, so one of my favorite memes is that, so you can't own the precious physically, but you can pay to have your name listed as its owner in an online distributed database. So it's not really yours, right? It's on the chain as your wallet being the registered owner of that particular asset. But again, to Martin's point, yeah, I mean, the smart contracts have the ability for folks to code programmatically royalties. So if you're an artist and you're selling paintings, physically, every time that painting gets sold again, you're not getting any royalties. But with an NFT, if you register an NFT and sell it, you can bake that into the contract to get, like, let's say 10% every time that NFT changes hands.
To bring a real world example, I met an artist at Hack Week who writes music, and he sold his music to a lot of famous celebrities. And he said that it hit him one day about how many famous songs he's written for these celebrities, but he's not raking it in. The record label that he signed on is taking a huge chunk of his work, a huge chunk of his profits, and then all of the middlemen in between. So now he's using crowdsourcing with NFTs in order to raise money to release his music and then make back a lot of the royalties and money that the middlemen have taken.
Exactly. Just another example of how real world example. Well, we've come to the end. Really grateful for the feedback, the questions. Obviously, just ping us with any more questions, because it's really good to know. We're going to be doing more of these in depth. If there's any topics in particular you want to learn, if you saw any, actually want to know more about layer 2, I want to hear Crosstalk talk a lot more about this certain thing. I think we're a bit too late for this question, but I can answer it just after it. That'd be good. Yeah, please let us know, because we're going to be doing a lot more of these talks going forward, because we want to get more of a blockchain presence within Lab going forward. So I'd like to thank everyone for attending. Obviously, Ryan, Lena, and Craddock, thank you very much for stepping in at the last time. Appreciate the 70 of you that stuck around for the hour. Alexander, just ping me personally, and I'll speak that. And Philip, just ping me, and that'd be good if that's okay, Alex. We'll go from there. Thank you very much for that, and have a good rest of the day, and hope to hear from you soon. Thanks, guys.
Thank you all. Have a good one.
Thank you.
Thanks, guys.